Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, December 28th, 2017, about 4:35 p.m. Central Standard Time. Another day, some of the markets went to record areas. You'll read about the Dow. Apple just released and said that it's taking the price of battery replacement on some of the older iPhones from $79 to $29. I guess those lawsuits and the idea that they could slow down the phones isn't sitting well. We'll see what goes on, but that's a good move from the corporation, especially in front of Christmas. In the metal markets, 16 days of rallies in copper and gold without these markets even looking back. Pretty impressive. Now, the biggest problem you have at this time of the year is trying to make something out of nothing. Please understand that. Tomorrow, you're going to have even a thinner trading day than today. The markets will be open. They're in most cases normal hours, and then we're all gone until Tuesday for all purposes. So please enjoy the holidays, but don't try to be a hero here in these markets. You can get moves that you don't understand for no reason at all. By the way, I'm wearing glasses today. Popped an eye vessel. You know, you ever get those red? It's ugly. I don't know what caused it. It could be the cold in Chicago. It's really freezing here. But when we look at the S&P, as you can see, a weekly area chart of closes. For the week, the market is pretty much unchanged. Hasn't gone anywhere at this point in time, down 30 points. If you take a look at what the market's doing on an area chart of closes, you tell me that we're not just going sideways here. It's as though traders said, okay, after this last rally, it's time. I've made my money for the year. What am I trying to accomplish? And that's what I think's going on. And you get to see this in all the narrow action, lack of direction that the market is doing at this point. In terms of swing lines, they've actually turned down, which is always a warning sign that maybe it's time to get out of Dodge. Doesn't mean you can't reverse this and just start the trend again. I'm going to repeat. At this time of the year, anything can happen for literally no reason, but you do have the pattern of lower highs, but you've got higher lows. You know, take a look at what's going on here. The last break, maybe you don't. This break low was 26.82.25. I think you took that out the other day. You did it, 26.81.50. So you actually do have lower highs and lower lows. That reverses if you take out yesterday's high, an outside day downs high of 26.91, and that would throw the market back into, right at that moment, another uptrend. Trying to play in these tight of ranges, 6-point range for the day, enjoy yourself. I'll just watch it. Should the market pull back a bit here, it wouldn't surprise me then if you wanted to get to the 18-day average of closes, the old, if you will, that line in the sand number where the market can sit. If it takes out 26.91, you could get a late in the year rally, as we'll call it, that last day, and the upper Bollinger Band could be a target of 27.09. As you can see in the momentum, when we reopened tonight, you had an 81.13 reading. If you open down, this market could get hurt. But if Apple's performance tonight of lowering the price of the battery by $50, that's quite a bit, by the way, from 79 to 29, well, that might lift the market. Either way, I'm going to keep saying it. You're in the middle of no man's land. In the NASDAQ, the market is tracking down in momentum. Again, if the market breaks, I'm looking still for that 18-day average to be supportive. The market that'll give you the first picture of what Apple's news is this market. Now, if we look at today's range, we see the low is 64.42 Yesterday's low was 64.42, so we don't have an outside day down. All we have is a pattern of lower highs and lower lows at this point. In the Dow, sideways action, just like we're getting in the S&P. Momentum still bullish, if you will. The cash market's stronger than the futures right now. It's the one you'll read about saying, it's gone to all-time highs. The last high we made in this market was 24,869 up here, and we're about, 70 points off of that right now. In the Russell, overbought. lower highs, lower and low pattern, sideways action. End of the year. I don't know how to say this any clearer. Could you break? Yeah, but are traders going to get involved in this one way or the other? Highly doubtful. In the VIX, tell me that you're not stuck right on this 18-day average of closes. Market, again, has come to a grinding halt. Not an awful lot to be done the last day or so. TLT, the ETF for the interest rates, higher lows, higher highs, bullish. The market's over the 18-day average, upside bias, and momentum still pointing up. As I said earlier, though, if you bought the market here at 126.45, you got to put a stop at 124.52. It might be a bit more than traders wanted to do on that trade. Take out today's high, and you could make this the new swing line low. I'd move it from that arrow pointing to there. Might be a little better of a risk-reward parameter if any showed up. I don't see anything showing up between now and Tuesday, to be honest. You're stuck in the bonds at the 100-day average of closes in the 18, about as neutral as you can get on a chart. March T-notes, well, the market is correcting an oversold condition. Oversold happens in slow stochastics when these oscillators, and these numbers will travel typically between 80 and 20. When the market decides to get bullish, they'll get over and go sideways over 80, and when they get bearish, they'll get under and stay sideways underneath 20. But more times than not, they'll just do this type of traveling back and forth, and that's what you have right now, an oversold condition. Dollar index, I think I was right when I said this market looks as though the bears have control of it the other day, and that was back here when you were lower highs, lower lows under both the 18 and the 100-day. However, I can't get away from the fact that you're oversold. It's the end of the year. If you break down, maybe you get to the lower Bollinger Band, and that's right what you did today. Could it be the start of something bigger? It always could, but who's going to be aggressive in these markets going into the new year? I certainly don't know, but it could happen. Sideways action, a flip-flop mirror image in the eurocurrency going to the upside. You hit the upside target today. Would not be surprised if the pros are taking money off the table in the euro on the top side, the dollar on the downside. You keep moving higher in the Aussie dollar with an embedded reading. Embedded means you've converted from overbought to locking in a bull trend. Now, this is your first move over the 100-day average in a while here. You can see you have to go back to October to get that. At that point, we had a huge decline to carry to this break. With China doing better, with China loosening up some credit controls, this market has come alive at the end of the year. Japanese yen, neutral. When I say neutral, I mean neutral. Higher lows, lower highs. Actually, this arrow doesn't belong there anymore. I could point both arrows to the upside now in the chart, but it'd still be neutral. The Jan Bitcoin, you came down to the lower Bollinger Bands, went up to the upper band. This is where I think the pros are taking money off the table. Neutral zone is right back here, and you are overbought. When we come to the crude oil situation, so now we've got word that the 40s pipeline is in fact coming back online in a faster frame than the market thought it might be, and you're backing off a little bit on the spread of Brent versus WTI crude. The market is up in the Brent at the upper Bollinger Band into a resistance zone, overbought. It's been in an uptrend. It has widened its current band out. If you can understand what this means, here was your sideways action. This often leads to a breakout to the upside or downside. It doesn't mean that you can't get whipsawed in between, but that sideways action, it's like a spring in a pipe. And the market, in order to break out, has to first, if it's to the upside, get itself overbought. And it's exactly what's happening. It's not immediately pulling away. So that gives you an idea it's accelerating with price, and that's what's going on right here. Now, if you take out 66.03, what would happen is you'd probably just have widened out a current trading range, and I think that more or less would be how the year finishes itself up. In the WTI, you've got how many days where these numbers are both over 80, both the red and the blue, and you can see these numbers here. Both over it today, both over it yesterday, not the day before. It is not common to get 3 in a row, but if you get it, the market is converted from being overbought to locking in a bull trend until that red line gets back under 80. Right now, as I view it, you're in an overbought condition up against the upper Bollinger Band where the market has a history of failing. That's all that I could say with it. In the gasoline, overbought, in an uptrend, have hit the Bollinger Band target and the market stalled out. Natural gas, finally, that weather kicked in. Now, what did I just tell you yesterday? Go to yesterday's tape if you don't believe me. What I said is, you've lost the reading. There's no reason to be short now any longer in the nat gas. That was the end of this down move. Now, I had no idea it was going to jump the way it did today, but when you lose an embedded reading, here you had it on Tuesday, you lost it yesterday. After a big decline, it's often, not always, but often a big warning sign. And how often do you hear me here say that if you understand the slow stochastics, momentum often leads price. Not all the time, but often. This was your price leader. Today, if you didn't pay attention, you've gone from yesterday's close up 18 cents. You've given up most of the trade. Wow. So that gives you an idea how to work with that. And I talk about this in my charting course all the time. And let me tell you about a trade you can't lose out on. I've already raised the price of my charting course. It's now $129.95. So this is a course that I began a year ago at half that price. Kicked it up. It's going to go closer to $200. And I do that, and I've got a history of when I do courses, as time goes on, this is what I do with them. It doesn't change anything. The value is there. I'm still honoring the Christmas coupon. That is XMAS. No apostrophe. Doesn't matter caps or not. The course will be $79.95. Now, what's included is 6 hours of videos that will teach you, and I mean teach you, the 5 different indicators that I believe set you up with a game plan for trading. Should you add to it, you should do whatever you want. I don't walk on water. I have plenty of bad trades, plenty of good trades if you've kept up with me over the years. My idea is I'm the guy that's supposed to provide you with ideas. You're supposed to take those ideas and decide what you want to do with them, or don't take the idea. That's up to you. But it's swing lines. It's going to be moving averages. It's going to be stochastics, Bollinger Bands, window envelopes, all tied together, and each one acts as a filter on the other. My idea of looking at a chart is finding a reason not to do anything with it. When everything says do something with it, that's what you're supposed to do. And often you'll see a pattern come from areas like this where that's what I call that pipe and a spring in it. The market narrows itself in getting ready for another trade. That often happens after a trade has occurred. It could either be a sign that the market's paused and ready to move on again in that direction, or a new trend is going to come in. I try to give you the best I can with ways to catch this back and forth with teaching you what I see on it, and you do the same thing. So you get the videos, you follow what I do, you go back on your charting software to those days, you do the same thing. Then I bring you up to date in the mornings. We go to current charts, and we start talking about those different lines that you're learning to work with, and I'm trying to dig them in. In 2018, live webinars come back. I took practically the whole year off from doing webinars. I'm going to go back to doing those. And no, not everybody's going to be invited into them. Certainly my students are, my research people. You get to ask me questions. Bring up any chart you want. I don't care if it's a stock, an ETF, futures contracts. We'll try to figure out what it's looking like. Should be a heck of a lot of fun. How do you get involved in all this? Give us a call. You can go to our website, and under the word education, you'll see it right there. Pull down to the Ira's charting course. There's FAQ pages, fact pages on them. You'll see a video. I explain how everything works. You can always call my staff and they'll explain it. But come January 2nd, the price, first of all, the coupon will be gone. The price goes up to $149.95. It's almost double what you're going to be paying at $79.95. It's a good deal. How do you do it if you're watching me on YouTube? Click this icon. It'll take you right to that page. I will be here tomorrow. I'll talk about this one more time, and that's it. Then I'm on to my other goodies, as I call it. I'm Ira Epstein. Treat yourself to something. Learn a little bit about the markets. At least learn another approach. Decide if it's right for you or not. I'm Ira Epstein. Have a great day, and I'll see you on Friday.